Be content to act and leave the talking to others. Baltasar. My friends, we act every single day here. We don't run our mouths about news, about what you're hearing on CNBC or Bloomberg, you're reading in the Wall Street Journal. Why? Because we care about one thing, that is price movement. And many times price movement fools all of those talking heads you see on TV, all of the writers. There is this saying on Wall Street, I've spoken it many times: buy on the rumor, sell on the news. Excuse me. What does that mean? Buy on the rumor, sell on the news. That means that on Wall Street, the rumors are going all over the place, and by the time the news comes out, that move has already taken place. Now, again, if you're a person who's trying to do day trading, that kind of information could be interesting to you if you had it, if you were an insider, if you were on Wall Street. And I'm not even talking about the legality of those types of things. What I'm talking about, though, is how you are not privy to that information. And you know what the good news is? You don't have to be. You know why you don't have to be? Because we have something called the weekly vertical crossover, and we have 2-day recrosses. Weekly vertical crossover shows you when a trend changes, when there is a sea change in investor sentiment, up or down. And we follow those. We have had 13 of those. We have actually the 14th one ongoing now. But of the 13 that we have had, 12 of those have worked wonderfully for us. We chart those for you. We talk about that. You can see these as they happen, and we urge you to practice trade with us. Now, we have a great training for you today. The people who are subscribers at chartingwealth.com, just go there, put in your name, email address. That list is never spammed. It's never shared. It's entitled How to Master the Charts. We have that free training for everyone who is a subscriber. How do you know you're a subscriber? Because you get every day our email that includes this program. Now, again, we want you to listen to us, watch us, the podcast, the YouTube channel, all of that. But in order to get all the goodies, go there and subscribe, and you'll get everything you're already getting, plus more. You'll get our trade worksheets, daily market worksheets, weekly market worksheets, the special trainings we do every day, all the stuff that you get there. So please go ahead and sign up for that. What do we see going on in today's market? We see stocks are up. The NASDAQ is up quite nicely. We see bonds and gold are down, which is good. We want stocks to go one direction, bonds and gold to go the other. When they're going all up together, all down together, again, remember, bonds and gold tend to be places where money runs when stocks are not doing good. When stocks are doing good, we tend to see bonds and gold go down. Now, we'll talk about gold because that's where our most recent weekly vertical crossover has been going down. It is down for the day. We'll look at that in just a minute. But let's look at what is going on the S&P first, then we'll get to the NASDAQ 100. Now, what we see happening on SPY, which is the Standard & Poor's 500 Trust Series Exchange Traded Fund by Spiders, we see that as the week has started, we had a a decent-sized down week last week. We saw where the market peaked back on the week ending the 4th of September. This last week, ending the 11th of September, we see a down week, a solid red down candle with a wick on the bottom, no wick on the top. This week, we have a solid green candle. It's really a spinning top, a wick on top, a longer wick on the bottom. But what we see is a slowdown in the down movement. The S&P 500 up for the day 0.49%. The price percent oscillator, which has been heading down, is flattening. It's still positive. Derivative oscillator losing lots of momentum. Remember, the derivative oscillator is our leading indicator. The price percent oscillator is our lagging indicator. The price percent oscillator is a percentage version of the MACD. The derivative oscillator is a triple smooth version of the relative strength index, for those of you who understand those two types of indicators. Now, a lot of charts don't have these indicators That's the reason that we use every day freestockcharts.com's paid version TC2000. If you would like a discount on TC2000, if you're serious about learning how to do this, I think it's the best trading software out there. And the nice thing is they have a web version. Anywhere I go in the world, I get on a computer, I can call up my charts. That's beautiful for a few dollars a month. I think the first package starts around $20 a month. It is beautiful, and we give you a $25 discount. Follow the link in the show notes. Now, we're going to leave the weekly, and again, we always start with a big chart because that's the big wave. That's where the weekly vertical crossovers occur. Then we go to the medium chart, which is the 2-day. What do we see going on the 2-day chart? We see we reached our bottom on Monday the 14th. This is the first day of the latest 2-day candle. We see things are up, prices touching that weekly trend line at this point. We see that the price percent oscillator on the 2-day chart still going down. Now again, these charts all have price percent oscillators, derivative oscillators, just different time periods, okay? This is the 2-day chart. We started with the weekly. Now the 2-day, the smaller wave, we see is still going down. It crossed over, going down back on the 2-day candle ending Tuesday the 8th. That represented Monday the 7th and Tuesday the 8th. So we see that derivative oscillator still gaining downward momentum. Price percent oscillator, despite the first day of this latest 2-day candle being up, is still going down, okay? So the overall wave on the bigger chart, that is the weekly, is up. The 2-day is still going down. Now we go from the 2-day to the half-day. What do we see there? Well, there is a crossover going up in the morning. We see it crossing over into the afternoon, big up morning, and then slowing down in the afternoon. Now we are going to take our prior 4-hour trend line, well, half-day trend line. Old habits die hard. It's actually 195 minutes, not 4 hours. The market opens, of course, at what time? 9:30. Closes when? 4. So that's not 8 hours. So what do we see going on? Well, we have a nice trend line over a 2-day period heading up. So again, nothing has changed. We still have the fact that the 2-day chart's heading down. The weekly chart is heading up. So we don't have a trade at this point now. What's the most likely thing to happen next? One of two things. One is either a crossover going down on the weekly or a crossover going up on the 2-day. What happens if the 2-day crosses over going up? We'll have what we had happen back on the 3rd of August. That was what we call a 2-day recross. We jumped back in to a beautiful up move on the market somewhere around the $326.43 mark up to a high of $358.75 over what was that, about a 2-week period, 2.5-week period. Quite nice. So again, we'll watch and see what happens. We don't have to do anything right now. We're going to let the charts lead us and tell us what to do, but we don't have a trade at the moment. Now let's go to QQQ. What do we see there? Well, we have an up day. We have a green, solid green candle, a spinning top, like excuse me, like we saw on the S&P, but look at what's happening. The blue price percent oscillators trying to cross through the red signal line. Now they could pull it. Actually, it was more prominent yesterday, crossing through, going down because of the up day. 1.42%. That's a pretty good up day. It has slackened on that. If things keep going up, it could end up not crossing over, going down. Remember, you never call a candle until it's drawn, and this is a weekly candle, so it's typically 5 days. Sometimes we have short 4-day weeks. Rarely do we have 3-day weeks, but sometimes it's shorter. Most of the time it's a 5-day candle. That makes up a week. So we don't call a candle until it's drawn. Why? Because they can change. Candle's not a candle until it finishes drawing. Derivative oscillators going negative. Price percent oscillators trying to go negative now. We'll wait and see what happens as we get closer to the end of the week. We go to the 2-day chart. It's still heading down. Derivative oscillator gaining downward momentum. Price percent oscillator slowing down in its down movement. And of course, we see a green open box spinning top. Now that's a stronger up candle. Again, a solid green, if you know anything about our Heikin Ashi candlesticks, is a slowdown in the down movement. An open box green candle is an up move. And of course, it was up for the day 1.42%. So we'll continue to keep our eyes on that. That candle won't finish drawing. It's a 2-day candle until the close of the market on Wednesday. Let's look at the half-day chart. Up in the morning, and then sort of a slowdown in that up movement in the afternoon, crossed over, going up. So we can go ahead and redraw our trend line as best we can. And again, that just gives us a quick reference on the 4-hour or the half-day chart as to which direction the movement's in. We look at this chart quickly, we can see the weekly's up, the 2 days down, the half-day is up. So that's where we are, again, waiting for one of two things to happen. And it may happen at the end of the week. The price percent oscillator rotating over, going down on the weekly chart is what we call a weekly vertical crossover. If that happens, we're going to look to jump in for a confirmed down move in our practice trade. If for some reason it bounces off and the 2-day recrosses at some point, probably not this week, but maybe next week, if that occurred, and those are ifs, we would jump into a 2-day recross. But the charts tell us what to do. When the weekly's moving one direction and the 2 days moving another, guess what? We don't have a move. So we'll continue to watch, see what happens. We're going to leave stocks now and go to bonds. Bonds and gold down the same amount for the day, 0.24%. Just happens to be the same. Again, just a coincidence. What do we see going on bonds? Well, the price percent oscillator heading down on the weekly, derivative oscillator about flat, green open box candle, spinning top is what we would call that. We look at the 2-day chart, it's flat, negative still and flat. We see a lot of indecision. As far as this day's movement goes, we have a red, almost a doji after a green up candle on the prior 2-day candle representing Friday and Monday. So we'll continue to watch, see what there is to see there. What do we see on the half-day chart? Again, down in the morning, a slowdown in that down movement in the afternoon. Still positive. Now, you might be asking yourself, what happens if there is a 4-hour cross or a 4-hour recross going down since the weekly and the 2-day are heading down? What could you do? Well, you could practice trade that going down. It is our smallest wave, and it is the least likely to work. The most likely is the weekly. The second most likely is the 2-day. The third most likely is the 4-hour chart. But again, I want to encourage you, if you see that happen in the morning, then consider jumping in the afternoon and practice trading that, filling out your trade worksheet, seeing what there is to learn. Lastly, we're going to go to gold. Now, this is the special one. We had the weekly vertical crossover at the end of last week. And I don't know why that has shifted. There we go. What do we see going on? Well, we see the price percent oscillator steadily pulling away from the red signal line, derivative oscillator gaining downward momentum. We do see a green candle, green up candle that is forming. It was a down day. It was an up day yesterday, about 0.73, about 0.75%. Today it's down about 0.25%. So that leaves us up what? About 0.5%. Again, all things being equal. So what do we see going on? Again, we're going to pay close attention to our price percent oscillator. That is our main indicator. That is our big daddy indicator. Derivative oscillators also going suit. It is devolving. Go to the 2-day chart. We can see the price percent oscillator still heading down, although slowly. Derivative oscillator losing downward momentum. We see that we have a green up candle that is forming. Now again, it was a down day. Why is this up? The Heikin Ashi candlesticks show you average pace. They are evaluated, put together. The composition of them is different than your typical high, low, open, close in a traditional candlestick. you want to know more about the Heiken Ashi candlesticks, I'm going to put that at the end of today's video. If you've not taken that training, gosh, I think we've had 150,000 or so people. It's the most popular video we've ever put out. I'm going to stick that at the end of today's video at YouTube. Check out the link. You can get to it there. But that is what it is showing us now. Again, derivative oscillator still negative, price percent oscillator still heading down. Go to the half-day chart. What do we see there? Well, we see where things peaked in the morning and then slowed down in the afternoon. That is where we have the down movement. Price percent oscillator lost some up movement, went flat, and the derivative oscillator did too. So we'll continue to watch, see what there is to see. You hear a lot of people talking, again, about what's going to happen with gold. We're going to follow price movement in gold. We're going to watch and see and let the indicators lead us. That is where we are, folks, as we end the day on, what is this, Tuesday, going into Wednesday. We so appreciate you being with us. We will continue to follow these markets on a daily basis. If you don't have our book, Charting Your Way to Wealth, you need a copy. We have an autographed one waiting for you here at the office. Follow the link in the show notes, buy the book. If you want to supercharge that training also, fill out those daily market worksheets, weekly market worksheets, and trade worksheets. They're in your show notes every day. PDFs are there for free. Print those out, fill them out. You will find that that will supercharge your training. And every time you do a practice trade, please fill out that trade worksheet throughout the course of the trade. Once you do it, you'll never stop doing it because you will learn so much from it. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.